What's up everybody, Tom here with another video. In today's video, we'll be covering our thoughts for the markets in the week ahead. We'll also be talking about technical analysis levels for the SP 500, gold, Nasdaq, Bitcoin, silver, dollar index, and more. Last week was up, down, and all around, but we saw some all-time highs being reached on the markets. What's next? This one is going to be good. Stay tuned. Okay guys, well, where better to start than a bit of a recap of last week's price action, and the S&P 500 heat map for last week will show us where Wall Street is rotating into. And instantly when you see this chart, you can see money coming out of banks, money going into healthcare, medical services, technology, and of course, a little bit into real estate. These were the sectors we were targeting as well. Healthcare has been a big proponent of this channel over the last couple of weeks. And the reason why is because Wall Street generally move into it in June. In fact, it outperforms the S&P 500 by 0.8% on average over the last 30 years during the month of June. Understanding these sequences and these rotations is a key thing to investing and trading, and it's great to see it working out again for so many people in the community. Let's now take a quick look though at Friday's closure and what happened. So we saw hyper stocks come back through. IWM, the Russell 2000, the small companies, they did really well. We also saw the Nasdaq, S&P 500, and Dow Jones hold their gains that they got from the Thursday CPI. And it was really good. In fact, a pretty strong week overall, closing at all-time highs for the S&P 500. It really got above and did the job and held it up there. When we have a look at the actual sectors, you'll notice ILV and IBB, the healthcare sectors and biotech, were down. That's because they were up so much on Thursday. It was hard for people not to take some profit last week on these sectors. And the rest were all smattered between partial gains going into the G7. We also have a look at the fear and greed index of the general retail traders out there last week. And this was interesting. The market was going up, yet the fear was returning back for the retail traders. Now, this is taken from all the chitter chat on things like tweeters and everything else, Reddit and etc. And people actually getting more fearful in the markets. So when you think about this, Wall Street love to create this thought or process. If everyone is fearful, they are going to be greedy. If they can convince all of the retail traders to make the wrong decision, then they're going to push it the ultimate way. So ultimately, if everybody else thinks that the market is too high, blah, 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 then if the price action is showing long, you should actually feel a little bit more confident in that. I know it's counter what you think, but that's the way that we do it here on the channel, and it works very well for us. So let's have a quick look here at the technical analysis and get started. Dollar index was the first thing that came to my mind after seeing Friday's close, and you'll see why. Look at the big candle. This is a daily candle, and it goes smack bang straight into the resistance, the 50 exponential moving average, this line here. And this week could be the week of breakouts for the dollar index. If we go over to our weekly chart, you'll notice that we have two what they call long leg doji candles. These are indecision candles, very important. We almost made a decision on Friday to go bullish, but you can see it just stopped before closing above this zone. So this is going to be the area that everybody should be looking at this week. And you can see it's around this 90-60. And if it does close through this level, where's the next logical stop? It's going to be somewhere around this 91.414. So this could mean some big moves on the US dollar if it can get closed above this area. We're going to be watching it on this channel. Make sure to subscribe to find out more. Let's have a look at the US 10-year yield. This continued to decline. Really great for Nasdaq traders out there. Kind of bodes well. The more this declines, the more the US 100, the Nasdaq, goes up, the QQQ. And it looks like it's doing those kind of two steps down, one step back, two steps down, one step back, kind of closed around resistance where the previous support was. And we expect this to hopefully decline through the week with an eventual target maybe around 1.35, just based on this descending triangle we drew up. I wouldn't trade the US 10-year Treasury very much. However, knowing that it's declining usually is a positive for the Nasdaq, as we said. We'll move over to gold. Now, gold is a tale of a very be careful kind of market. We basically have a great trend line, a trend line that we've been following here recently. We knew that this was a good point. It bought up, did not make a new high. Very important that didn't do that. That's actually bad. Then it came back down without making a new peak, already showing signs of weakness. And as we said in the Friday session, we need to get above a new peak. That's so important. We failed to do so. We got back to the equal high and came and tested the trend line. And this now means that for gold traders, they're going to have to be hyper vigilant around this level this week. Is this a good sign? No, it's a weakening market. Effectively, what's happening is we've got a peak over here, we've got a trough, we've got a lower peak, we've come down, we've got an equal peak, and we've come down again. Why is that happening? The market is weakening. So if the market closes through like this 1903 level, is that positive? Absolutely it is. That's going to be the big bull sign for the week in terms of technicals for gold. But being back down at this trend line is not good. Now, if we break underneath this last low, what's going to happen? We've broken the trend line and we're going to start seeing sell-off weakness. At the same time, what's going to happen? The US dollar is going to buy and bull through that resistance zone that we saw before. They're all connected markets. So the gold is really hinged here on what US dollar does next week. But when you think about it, above here, big bull sign, down here, I think the bears are coming back. And unfortunately, silver is going to face the same fate. The silver chart is a lot messier. So if gold gets through our trend line, what's going to happen, community? Unfortunately, I believe silver will also decline back down to somewhere around this 26.32 level. And you can see that's where all that previous resistance was. If we have a look on the daily, it becomes more clear. See that? So that resistance, support, support. This level is the next logical zone for silver. But it won't happen unless we get through that gold trend line and dollar index breaks the resistance. Let's now get into our market analysis, and we'll start off here with a bit of Tesla. So Tesla did end up closing at around 610 for the week, 609.89 here. Decent close. There's no bullish or bearishness really on Tesla at the moment in terms of the shorter time frames. It looks, if I was going to say how is it looking, I guess shorter time frame you go bullish. On large time frames, you'd still say well within the bear kind of market. If we go out here to like an 8-hour chart, you'll notice we have a trend line drawn between all the last previous peaks, and we know that that intersects with our 660 or 666 demon zone, the devil zone. And if we break through this level here, the 635 this week, then we expect a quick participation to the 660 or 666. Then we expect sellers to regain control of the market. Where the really big bears come in is going to be down here for Tesla fans. So around that 560 zone, as soon as we close underneath that, unfortunately, I believe it's 500 or 450 next stop for Tesla. This chart does not look healthy. It's just very, very, very negative at the moment, and you need to break through this 635 for the bulls, and it kind of has to happen this week. If it doesn't, it's so far now lagging the Nasdaq that you can see there's something going on here. Wall Street are demanding something from Tesla, increased competition, lots of other problems currently going on with that stock. Let's have a look at IWM, Russell 2000, probably one of the better charts that we've got right now. We've got a breakout of the channel. Now, we were stuck in this channel for a long time. We've got a breakout of that channel. And I do know that there is a resistance before out here, but we're going to have to ignore that based on that being more of a hunt. And now we're moving towards the 247, 250. I think that the small caps could be the place that Wall Street is moving money into over the next couple of sessions. And through last week, it broke out, came back down, retested it, and now it's moving forward. A new break high here. I expect all-time peaks to be met very, very shortly after that. I don't think that we break a high here and stop straight away. We would break a high here and go straight through this previous 234.50 zone. So IWM is setting up quite nicely for the week ahead. Let's move over to the Nasdaq. So the Nasdaq hit close enough to 14,000. We actually think the resistance is higher, so you got about that 14,060 for this. But I would be surprised now if the Nasdaq doesn't go on to make all-time highs. It's done the right type of thing. It's done a sequence. It's pulled back around 8-9%. It's then moved forward. This is still a very big growth sector. It's doing really well. It's got some great companies in it. And all we really require is a few more points to get an all-time high. With the S&P 500 being where it is, I think the Nasdaq is prepping for a movement out. And let's say this week we get a closure above. What's going to happen? Probably pull back. Previous resistance here will act as support. That'll be a good little day trading opportunity from a technical level, and we continue to move forward upwards of the 14,000, potentially even 500, 400 zone is kind of a target here for this. QQQ, the Nasdaq, same thing. You'll see the closure here, very strong. I expect again this resistance to probably be met by a little bit of selling, but overall most of the markets are looking pretty bullish right now. And the S&P 500 will lead the way here in terms of technicals. So watch that. And the QQQ is just kind of like the higher trade. So that's the one that's going to give you more percentage, but obviously there's more risk as well in this one. Let's have a look at the S&P 500. So this closed above. We'll go to the weekly here. You'll notice big, strong close, all-time highs. Absolutely, it wants to move to the next zone. Where's the next zone going to be? I think the best thing to do is to use our community trend line, the one that we've been using now for months on this channel. We've done it together and we've used this as much as possible. So community trend line should be incoming. Where would this sit? I think around this 4,000, potentially 400 zone is the target here now for the months of June and July for the S&P 500. It's looking strong. There's no bears. The bear trap was set last week. They pushed through that after coiling for a few days. You can see it here. And unless the bears can somehow regain control due to a G7 or a political thing or something else, the technicals seem to be setting up pretty strong here. Even the 2-hour 20 reached twice, bounced off it. Maybe that's now a little bit of a trend, hits the 2-hour 20, buys up. But it is looking notoriously strong. I mean, what do you guys think in the comments down below? Bull or bear for this week, guys? Let me know down below. So what else is going on in the markets? Well, of course, a lot of discussion about Bitcoin and whether it is ever going to recover and whether the crypto market's going to recover. So I think we're in two interesting things here. Number one, I actually think that we're in a point where money is flowing out of the alts. It is going into cash, stable coins, or it's actually going into Bitcoin. And Bitcoin, as always, will lead the way here in the crypto markets. When Bitcoin goes on a run, I think the altcoins will come, but they will not come as fast as you expect. It will be like all of the money will be flowing into Bitcoin again as it drives higher if it can. This trend line is clearly the one that we want to be watching. We'll go down to the 4-hour here. You'll see it. Bang, 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 bang. We made a big song and dance about how we thought it was going to weaken around here, around this 37.6 to 38-ish zone. Why? Because this area here made sense. And more importantly, we saw BTC shorts just on Bitfinex. I know this is only Bitfinex, hit these peaks. So when we put this out, you'll notice it's an incredible amount of shorts opened by the whales. And it was going across quite a few indices. If we look at a lot of different brokers, effectively what was happening is shorts were increasing across the board through most of the brokers. This meant the whales were transferring. You could see that as well. And they were trying to hit Bitcoin down after the El Salvador news and, of course, the other news about Bitcoin legalization and potential stuff around the world. So the story this week is going to be the consolidation here, 36,000-ish. If we break above this 36, maybe 2-ish zone, we should go back up, test 37.5. If we continue to struggle around here, then we may see further decline weakness. Now, I think if we come back down and let's say we get past 34,000 again in Bitcoin, I actually think we make a new low. So I think we go lower than any of these other spikes, the 31, the 31.1, or the 31 again. Why? It makes sense to take out stops. So effectively, if the big whales push this down and they get back down here, I actually think we spike lower, spike higher, takes out the stops, and then that should be the printed low for Bitcoin. Some people are disagreeing with me. A lot of people are saying 20K, 15K, etc. But if we continue down, I think we spike through, we recoup, and then that should be the printed low for this. Where we recover, still going to be around 42,500. So there's so much going on in the markets right now, and it's really a day-by-day thing. Why not join us 1.5 hours early before every New York session open? We go live on the channel here. It's a lot of fun. We've got thousands of you out there that come and view the community and what we're all talking about. So it's going to be an awesome week, I think. Quick thing on update on US oil, continues to go towards the 72. Everything looks good with oil. It's just really 2 steps forward, 1 step back, TA, and you'll notice that the 4-hour 20 and the 4-hour 50 continue to be some of the best moving averages to grab that trade. So guys, hope you're having a great weekend. Enjoy. We'll see you Monday for the open. And as always, make as much money as humanly possible. But of course, when only safe to do so. Good luck squeezes out there as well. We'll cover those in the pre-session. Bye for now.